Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, August the 12th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. Across the pond, we got German GDP in line with expectations at 0.4%. We also got German CPI in line with the expectation, which is the Consumer Price Index at 0.3%. Italian GDP came in slightly lower than expected at flat, but it was expected to grow by 0.2%. And then here in the United States, we got our core retail sales numbers. And the core retail sales numbers came in at negative 0.3%, expected a positive 0.2%. So this is the first time we're really seeing some bad economic data this month. For the most part, we saw some pretty good economic data earlier on. And we got producer price index, the PPI, month over month came in at negative 0.4%, was expected a positive 0.1%. And retail sales came in at flat, no growth there, expected a 0.4% increase. And then the core PPI, which takes out some of the more volatile producer price index pricing, it came in at negative 0.3, was expected to be an increase of 0.2. So all of those came in pretty bad for the most part. And then we got preliminary University of Michigan consumer sentiment came in at 90, was expected 91.5. So the consumer obviously not as confident, and it's reflective in those retail sales numbers. So with the consumer not being confident, then those retail sales numbers have a tendency to wane, and that's what we're seeing. On to the overall markets. Crude oil, just, right when you think that crude oil is actually gaining some sense because of all of the crude oil out there, you would consider it to go down. But when it sees those numbers, it has a tendency to be a little bit of a contrarian and pushing above the Fibonacci level of the 44.38 level, trading at 44. Right now at 44.38, so it's really pushing up against that. It's going to be interesting to see if it can get above that level. I talked about it this week. I think it could easily want to trade in and fill in this little blue area to create a nice little arch there, but we'll have to see how that rolls out. Gold pushing higher, with these bad economic data points. I've been talking about this. It looks to me like the smart money is getting out of the equities and into gold, into the bonds. That's what we're seeing a little bit today, pushing higher on that bad economic data. As the news goes out and starts talking about, like yesterday, all day long, the Dow, being historical highs, and same with the S&P and the NASDAQ. All of that stuff really gets the retail investor kind of jazzed up and go out there to buy that. And that's usually when we see a tipping point, because that's the opportunity for the institutional investors to get out. So, and if they're getting out of their equities, they've got to roll it into somewhere, and usually it is into gold and bonds. And as you can see with the bonds, almost up 2 points. They were up 2 points earlier today, but up 122 on the day as the equities are starting to wane just a little bit. Now, don't get me wrong, it's not like they're crashing or anything, but it just seems to be like all of these things culminating are signaling a bit of a top here, whether it's just a short-term top for a pullback or not, or we're going to see a broader bearish market going forward. That is yet to be seen. But to me, it looks like these are the culminating signals ahead of a bit of a breakdown. There's just too much complacency right now. Not to say that it couldn't spike up a little bit higher as the retail investor really comes in there and starts buying, but the overall to me, looks like it is wanting to, or looking a little bit more bearish. So the NASDAQ down just slightly, down 3 points on the day at 47.93. That's /NQ. Onto the E-mini S&Ps /ES, just slightly down on the day, 1 point, nothing to really write home about. It is an inside day from yesterday's big rally, but at the end of the day, where is the institutional money going? This is the breakdown of the E-mini S&P on a 15-minute chart. Again, still only down 1 on the day. And as you can see, just not much of a range at all today. Pretty quiet. Rush for the Hamptons, I guess. People heading from New York out to the Hamptons early for the weekend, trying to get the last bit of summer in. Could be why the volumes drop off. We used to talk about that on the floor, where Fridays afternoon would start to really see the volumes start to shrink because it was a rush to the Hamptons to get out of town. This is a trade that I put on. We did the Friday webinar a little bit early. We did it on Thursday because of some scheduling conflicts. So that being said, we did it on the long call calendar, and UAL, with our ticker symbol UAL, United Continental Holdings, United Airlines, seems to fit that bill, and it actually is really working out. It's right at this value area low. It's had its earnings. There's not a whole lot going on for the next few months in this, and it looks like it's really been comfortable in here heading into earnings. It was in this little groove here. It's just slightly above that now, but if we look at it, if we look at the top and the bottom here, 50 to 44, that is fitting perfectly with this butterfly, and we got some decent volume in there, or volatility, I should say, and volume for that matter, but decent volatility in there compared to the rest of the stuff across the board. So I decided to put this long call butterfly around UAL, ticker symbol UAL, and did it in the September. Bought the 44 calls, sold the 47 calls twice, and then bought the 50 calls to create that long call butterfly. All right, so we did one of the 44s. We bought one of the 44s, sold 2 of the 47s, and then bought one of the 50s to create that butterfly. And I did it for a 70-cent debit. So that being said, that fits all in line with all of the rules that I talk about in that strategy webinar, and it's a really good one. Got a lot of great feedback on it. So if you want to know what my rules are on this butterfly and how I picked where the wings are for this particular strategy, what my rules are on, say, around a $50 stock, then go to protraderstrategies.com and get that webinar sent to you. Also, we're doing a special on the volatility crush that you might want to check out also. All right, if you can't take that, take it easy.